Guys, the moving average, something that you see on a lot of people's charts, to be sure. All we're talking about is a selected range of prices, closing prices usually, and you divide that by with the number of periods in that range. Now, we've seen 50-period moving averages on a higher time frame chart, 9 and 10 on lower time frame charts. A lot of people have them available as an indicator they use. But let's talk about some actual strategies that traders deploy using those moving averages, whether simple or exponential moving averages, that maybe we can learn and add to our toolbox as both swing traders or maybe even short-term day traders, guys. So the simple moving average, it's a simple thing for a lot of people, but hey, it's all about strategies and executing trades ultimately.
Yeah, for sure. I mean, I'll start this off. I mean, what I've introduced, hopefully to a lot of the viewers here that have been with us for a while, is the 50-period simple moving average. And for me, this is what I use to get into positions and to look to see where we are on some of our longer term trades, right? And I have a good example here with Nike. This is the blue line. It's the 50-period moving average. Every single time it crosses is going to be an indicator to get long, right? And I mean, this is a big boost up. This is on earnings, so we're not really super concerned about that, but it does break the 50-period. And the thing about breaking a 50-period moving average is I also like to see it break with some kind of candle support. So when you get this breakdown here at 133, it's a trigger to go long. But if you miss that, which you probably wouldn't have been able to get this, maybe you can get it up here, 138, 148, or sorry, 139, 140, something like that, off of candle breaks. And then here's the move to the upside. Now, the 50-period moving average is going to give you outs as well. So when you're in that move, you could say I'm into 130, 140. Where do I get out, right? And you're never going to catch the top. That's the thing about this particular average, right, is that it's not very close to the current price. It gives you 50 days. So when it breaks back down to the downside, that is your trigger out. And again, even right here, this is why I'm calling up Nike. It's breaking back down below the 50-period moving average, but it's also losing support here because we've bounced off this 164 a few times, and then the break to the downside brings us, I mean, this is another moving average, a 200-period, which we bounce off again. But look at this. Let's just say, you know what? Forget about it. I'm out of Nike here and waiting to get in again. Well, getting out here at 164 and then getting back in right here at 159 isn't that much of a big deal. I mean, you're saving $4 or $5, but look at the momentum this brings back up to the upside. So it triggers it back up to those highs again, and now off of, again, not a great earnings report, Nike comes back down. I mean, that's a great earnings report right there. But in supply chain worries, Nike comes back down and hits it right there at 165 and change. So your in would be 160 right there on the break. And if you want to take some out, I always suggest don't use this as the be-all, end-all indicator, guys. But you may want to use it to say, you know what, I'm in now in a strong name. It's not going to work on a Lucid. It's not going to work on an AMC, stocks that have been flying around. But on stocks like a Nike, a J&J, something that's pretty consistent, I love to use the 50-period moving averages. So you get in there, and then you can get out right there again. And right now you're questioning getting in one more time. So as long as you're using this for some of these breaks, I like the 50-period moving average. It's tend to work for me really, really well. There's many more examples. These are meant to be shorter videos, but watch us every single day and you're going to see that on the charts, when we look at the daily, I love taking positions on 50-period moving averages.
Yeah, you're adding 50-period moving averages. I'm going to add one more thing to that, especially when it comes to the futures. I add the 100 and the 200. Now, on my normal charts, you're not going to see anything because I don't really look at moving averages throughout the day. But these specific levels matter. The reason being there's usually a lot of program activity around these price points. And you can see it, any trending market, you'll see this is the NASDAQ futures, by the way. You see as we approach the 100, the yellow is the 100 here. As we approach the 100 in October of 2020, and then again in late October, this is the late September, and then we get here closer in March, and every few months we are getting closer to that 100. This is the trend being strong. Another approach to looking at this is where do these moving averages cross over? You may hear it on CNBC or any news channel a lot. It's called a death cross, where the shorter time frame crosses below the larger 200 being the larger one. Right? So as we cross over, it just means the trend has shifted. It's like a strong trend, and when you get that shift in trend, it's all of a sudden, oh, what are institutions going to do? Are they just going to sell out of their longs now that we've crossed over? And we get close. And this is one of those things, we get close often. You see this 50, the weight is the 50. The 50 gets very close to crossing below this 200, never does. And the market is still strong, even though we went from 9,800 on the NASDAQ down to 6,800. We then took off right back to the upside without this crossover happening. So anytime we get very close to this crossover happening, just be aware that there are a lot of eyes with a lot of money behind them looking to figure out what they're going to do next if it crosses down. Why? I honestly don't know why this matters so much, but it's followed, it's well looked at, and institutionally, it brings in a lot of money when things like this are very close to happening or are about to happen, whether it's the matter of supporting the market back to the upside, preventing a cross, or the cross actually happens and portfolios are shifted. But just be aware that moving average crossovers, especially on the large scale time frames, the 50, the 100, the 200 that you see here, something to pay attention to just because it brings in a lot of money from institutions.
Yeah, one more example here before we go. I just, another name, and I was thinking about it and I forgot about it. So let's do it quickly right now. Google. This is the 50 period. Look at this thing just ride the 50 period all the way. Like this goes back down to January of 2021. So the whole year, it rides it the whole way, right? And I wouldn't use it, like if this is a name that you want to get into, I would not use this 50 period ever to get out of a position on a stock like a Google. You use it to buy any of these dips. These dips are not, long. And that's the thing to talk about here, is that when you have a high quality name and you're looking to get in, you're saying, well, when am I going to get in? Google just keeps on going up. I'm never going to be able to get in. Well, just wait for some of these dips. It does hit below the 50 period moving average a little bit here. So this is what you want. Of course, we've been in a bull run. It's a huge market, so this is going to make sense on the upside. But trust me, now that you're looking at moving averages, put some of these on your charts, think about it, and I think it will help you with your longer term trades.
And there you have it, guys. Both a way to get into positions in your long-term account, and also when to think about the trend with those moving average crossovers. So a couple of easy points there for you to implement, taught expertly by Arun and Sean there. And as always, remember, indicators on charts are telling you what happened in the past. So use them in conjunction with other reasons to get in, like quality stocks, as Sean mentioned, or overall trend trading or strategy in the futures with Arun. So I hope that was good for you guys. Trading strategies around moving averages.